There is absolutely no way the U.S. government is doing what was just discovered. This is not what we expected at all. A complete 180 degrees turn. The crypto community is now really confused and unsure about what to do next. But this is just the beginning. But what am I talking about? This is an urgent video, and let's not waste a second of it and get straight to the point. In the midst of the roller coaster ride that is the cryptocurrency market, today's developments are nothing short of intriguing. U.S. Bitcoin ETFs have just clocked their third consecutive negative day. Yet, in a classic display of its resilience, Bitcoin seems unfazed by the downward trend. In fact, it surged by an impressive 11% today, with Shiba Inu following suit with a remarkable over 10% increase. But what makes this news particularly captivating is the context. Just recently, the approval of Bitcoin ETFs unleashed a tidal wave of buying pressure, inundating the crypto space with hundreds of millions of dollars. And as you remember, this surge in demand played a pivotal role in propelling Bitcoin to a new all-time high, surpassing the $70,000 mark. As is often the case, other altcoins like Shiba Inu rode the bullish wave, experiencing a staggering 200% surge just a fortnight ago. It's become increasingly apparent that Shiba Inu holds a unique receptiveness to Bitcoin's every move, further emphasizing its symbiotic relationship with the king of cryptocurrencies. However, amidst this narrative of bullish momentum, there's been a consistent pattern of outflows from the Bitcoin ETFs, exerting downward pressure on the overall crypto market. These outflows reached unprecedented levels over the past couple of days, prompting concerns among investors. However, amidst the recent price dips, an intriguing development unfolded within the Shiba Inu ecosystem. One of the Shiba Inu whales made a bold move by purchasing over 300 billion Shiba Inu tokens. At the current token price, this acquisition amounts to over $8.6 million. And while the crypto market was dipping for quite some time, today the market defied expectations. Despite witnessing significant outflows from the Bitcoin ETF once again, the crypto space rallied nonetheless. But now you might ask, why did the crypto market pump despite the fact that the Bitcoin ETF saw a huge outflow? Well, that's a good question. There are multiple reasons, but one of them is that the crypto market is not as good as it used to be. The first is the emergence of rumors surrounding the potential approval of an Ethereum spot ETF in May 2024. These rumors have been circulating as multiple filings are being updated, akin to the process observed with the Bitcoin ETF before its eventual approval. And the logic is pretty simple. Consider the significant buying pressure witnessed over the past 2 months solely from the Bitcoin ETF. Now, envision the potential influx of additional buying pressure that could materialize with the introduction of the Bitcoin ETF. And the second is that the crypto market is going to have to deal with a huge outflow from the Bitcoin ETF in May 2024. It's a scenario that excites investors and market participants, as it suggests a substantial injection of capital into the crypto space, further fueling its upward trajectory. But just as optimism began to peak with the anticipation of an Ethereum spot ETF, a sudden twist took the market by surprise. The SEC made an unexpected move, reportedly issuing several subpoenas to companies involved in attempts to label Ethereum as a security. According to a recent Fortune report, on March 23, the SEC's investigation into the Ethereum Foundation could potentially pave the way for Ethereum to be classified as a security. Speculation intensified as the foundation hinted at being under investigation. Subsequently, Several US-based companies found themselves on the receiving end of subpoenas from the SEC mandating the submission of documents and financial records pertaining to their dealings with the Ethereum Foundation. This development has raised concerns among crypto enthusiasts, with many interpreting the SEC as a security threat. The SEC's actions as an attempt to destroy Ethereum. Should Ethereum be officially classified as a security, it could spell trouble for the much anticipated Ethereum ETF, potentially jeopardizing its approval. It appears that the SEC's campaign to reclassify Ethereum is gaining momentum, particularly in the wake of the blockchain's transition from proof of work to proof of stake in 2022. This regulatory scrutiny adds a layer of uncertainty to Ethereum's future trajectory and casts a shadow over the prospects of an Ethereum ETF gaining recognition. However, this is just the beginning. This development injects yet another layer of intrigue into the crypto space. With influential political figures weighing in on the matter, the regulatory landscape becomes even more uncertain. The implications of this letter could potentially shape the trajectory of not only Bitcoin, but also other cryptocurrencies seeking ETF approval. But hold on a second. In a surprising turn of events, it was revealed just yesterday that Blackrock, a major player in the financial world, tokenized their Blackrock USD institutional digital liquidity fund into 100 shares on an Ethereum contract. However, this revelation raises eyebrows and prompts skepticism. It simply doesn't add up. Why would Blackrock, with its extensive resources and expertise, continue to develop initiatives on the Ethereum blockchain if there were serious concerns about its regulatory status? This perplexing situation has led some members of the crypto community to speculate that Blackrock may possess interest in Ethereum. However, this is not the end of the story. The spread of fear, uncertainty, and doubt by certain entities looking to change the market behavior in a certain way. When FUD is disseminated, it often leads to panic selling as investors react to the negative sentiment. However, what's interesting is how the real heavyweights in the industry tend to respond differently. While the masses may succumb to the FUD and rush to sell their holdings, these big players often remain unfazed. They see through the noise and recognize the FUD for what it is. Baseless speculation designed to shake out weakness. But the real players are the ones who take the lead in this. Time and time again, we've seen these big players emerge on the right side of the trade. Their ability to remain calm amidst the storm and make informed decisions based on solid fundamentals sets them apart from the crowd. While others panic and sell at the slightest hint of trouble, these players stay the course, confident in their long-term vision for the market. Nevertheless, only time will provide clarity on this matter. If an Ethereum ETF were to be approved in the near future, it could trigger another wave of buying pressure, potentially catapulting the entire crypto market, including Shiba Inu, to new heights once again. Until then, we can only watch and wait to see how events unfold in the ever-evolving landscape of cryptocurrencies and regulations. And let's leave our emotions aside and reveal some cold statistics. A tweet has surfaced that encapsulates the current market dynamics succinctly. Days after breaking old all-time highs. Currently 13 days to bull market peak. After breaking old all-time highs between 266 to 315 days. This tweet implies that we may have approximately 300 days ahead of us before the bull market truly reaches its peak after surpassing previous all-time highs. It serves as a sobering reminder that while breaking old records is exhilarating, The true extent of a bull market's potential may take several months to fully materialize. And let's not forget about Shiba Inu's official team, who believe that Shiba Inu could reach its all-time high before the upcoming Bitcoin halving event, which is less than 30 days away. When juxtaposed with the potential 300 days of bullish momentum predicted by the tweet, it becomes evident that we're in for a ride filled with twists and turns. It is now clear that the road ahead promises to be intriguing as we navigate through the complexities of the crypto market, with Shiba Inu and other tokens poised to play significant roles in shaping its trajectory. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.
Blackrock is pulling the trigger. This is an absolute domination that's taking place. The Shiba Inu team is furious about what's happening on the market, and this can totally make sense. It's now less than 30 days left for the biggest event for crypto space. Bigger than the launch of Bitcoin ETFs. Even bigger than the launch of Shibarium. The whales are acting crazy and sending hidden signals to each other. But it looks like we finally deciphered this mystery, and now have a clear picture of what's happening behind the scenes and what to expect next. But what am I even talking about? Well, let me explain. Disclaimer. The market took an unexpected dip, which has left many investors feeling frustrated, especially those who had been building momentum and hoping for a positive turn. It's always tough when things don't go as planned in the world of investing, and this drop has added pressure on everyone involved. Interestingly, a Shiba Inu team member recently addressed this situation on Twitter. Her message wasn't just about the market itself, but also a reminder to focus on health and well-being, encouraging investors to take care of themselves during these tough times. She acknowledged the frustration many are feeling, but stressed that it's important not to let these financial challenges take too much of a personal toll. Her outlook was a bit more spiritual, saying that she trusts in timing, and what's meant to come her way will eventually arrive. And when you think about it, her message could be interpreted as a reminder that sometimes things are out of our control. In a volatile market, you can only do so much before you have to let go of the constant worry and accept the outcome, trusting that things will work out in the long run. It's like any challenge in life. There are moments when you push, but also moments when you have to step back and let things play out. But what specifically caused the market to drop? Well, the Shiba Inu team member provided some insights on this as well. She pointed out that the main reason for the decline is uncertainty, particularly with the upcoming elections in the US and the ongoing tensions that can impact the crypto landscape. When elections approach, especially in a country as influential as the United States, investors often become wary. They don't know what policies the new administration might introduce, which can create a sense of instability in the market. This uncertainty can lead to people pulling back their investments, which naturally drives prices down. And that's a very interesting approach. Holding on to cash during uncertain times, especially with the upcoming US elections, can actually be a smart strategy, and many investors are choosing to do just that. This approach allows them to wait and see how things unfold before making any big decisions with their money. One of the main benefits of keeping cash on hand is flexibility. When the market is volatile, having cash means you're ready to act quickly when opportunities arise. If prices drop significantly due to uncertainty, you can jump in and buy at lower prices, potentially maximizing your returns when the market stabilizes. In the crypto market, this strategy is particularly useful. Crypto can be extremely volatile, with prices swinging wildly in response to news or events. By holding cash, investors can avoid getting caught up in the emotional roller coaster of price changes. Instead of panicking and selling during a dip, they can remain calm and make informed decisions about when to invest. Ultimately, while the idea of holding cash may seem like a missed opportunity in a booming market, in times of uncertainty, it can be a strategic move. It allows investors to be patient and wait for the right moment to re-enter the market, especially in the unpredictable world of cryptocurrency. This thoughtful approach can help them navigate through tough times and make smarter decisions when the conditions improve. But here's something important. In just 29 days, the US elections will take place. Historically, Bitcoin has shown a tendency to pump right around election time. This trend suggests that as the election date approaches, we might see increased interest and investment in cryptocurrencies like Bitcoin and other, as people often speculate on potential changes in government policies and their impact on the market. This could mean that right now might be one of your last chances to decide whether you want to take the risk and invest before that potential price surge. With only 29 days to go, the window of opportunity isn't very long. If you believe that the crypto market will follow its historical trend and rise in value after the elections, this could be the moment to act. And it seems that some big players in the market are already making moves. The recent decrease in the price of Shiba Inu has created an opportunity for larger investors, often referred to as whales. On-chain data shows a significant spike in the large holders net flow metric over the past 24 hours. This metric increased dramatically from a net outflow of negative 163 billion Shiba Inu to a net inflow of 349 billion. This means that in just one day, the net movement of Shiba Inu by these large holders has changed by over 500 billion Shiba Inu. This huge increase suggests that whales are seizing the moment to buy more of the coin while its price is down, potentially anticipating a rebound in the market. Their actions can have a significant impact, as increased buying pressure from whales often leads to rising prices, which could attract even more investors into the Shiba Inu community. And it looks like the whales might be acting now for a good reason. A technical analyst known as Charting Guy is predicting a potential price surge for Shiba Inu. He's pointed out that the meme coin is showing strong signs of an upcoming rally, based on some successful breakout and backtest signals he's observed. Today, Charting Guy shared his insights, explaining that Shiba Inu is in its final waiting phase before what could be a significant rise. He backed this up with a historical weekly chart, which shows that Shiba Inu broke out of a downtrend that had been going on for about 7 months, starting in March. Interestingly, this breakout happened at the end of September, when Shiba Inu saw a huge spike of over 40% in just 2 days. However, after that, the price corrected and dropped. At the moment, Shiba Inu is showing signs of recovery. According to Charting Guy, this pullback is part of a successful backtest, meaning Shiba Inu is now poised for its next move upward. With the breakout and retest in place, he suggests that Shiba Inu is ready for a major price pump, implying a potential surge is just around the corner. This could explain why whales are jumping in now. They might be anticipating this next big move and want to secure their positions before the price takes off again. If the technical signals are accurate, the coming days could be critical for anyone holding or considering Shiba Inu. This situation gets even more interesting with Blackrock's Bitcoin ETF continuing to buy the dip. With less than a month until the US elections, BlackRock today stated that Bitcoin and crypto adoption is growing faster than both the internet and mobile phones. That's a bold claim. When the internet first became widely available, it revolutionized how we communicate, share information, and conduct business. It changed everything almost overnight, creating new industries and opportunities. Similarly, mobile phones took off at an incredible pace, making communication instant and accessible to billions of people worldwide. The growth rates for these technologies were mind-boggling, reshaping our daily lives in ways we couldn't have imagined. And now, if BlackRock believes that crypto adoption is moving even faster, it suggests that something monumental is happening in the financial world. This could mean that cryptocurrencies are set to change the landscape of finance and investing in ways we haven't fully grasped yet. What's surprising, though, is that despite these signals, some people remain skeptical or simply aren't paying attention. They might think this is just another trend, but they could be missing out on one of the biggest opportunities of the decade. The potential for wealth creation, new business models, and innovations tied to cryptocurrency is enormous. As more institutions like BlackRock get involved, and as adoption rates climb, those who stay on the sidelines might find themselves wishing they had acted sooner. The world of crypto is evolving quickly, and being aware of these changes could open doors to opportunities that could reshape financial futures. Ignoring this shift could mean missing out on participating in a financial revolution that could rival the impact of the internet and mobile phones. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.